What's going on, traders? Hope everybody's having a great weekend. Thank you for joining the weekly analysis on the E-mini S&P futures as well as the NASDAQ and Q futures markets as well. We are going to take a look at the economic calendar for this week. Now, of course, FOMC is behind us with the Fed leaving rates unchanged. No surprise there. Let's start off with the weekly charts, of course, get into some daily charts and some day trading levels. So if this is your first time joining the video, thank you so much for joining. And if you would subscribe to the channel, it takes 1 second and would mean a lot to me as well. Reminder that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, so let's get into the economic calendar first, and then we'll do the charts, and then we'll look at some of our other market internals and data points. And all these things, we bring them all together to kind of get our levels, our plan in order for the upcoming week. And let's start. All right, let's look at the economic calendar here and see what we have in store for us. I think we've got a quiet week ahead, so that is good. Let me see if I can close this adverge. Okay. All right, Monday, March 24th. Really nothing going on here. Flash services PMI 945. Not really a huge market mover, but we will pay attention to that. Consumer confidence on Tuesday, the 25th at 10 o'clock. Nothing really going on Wednesday, the 26th, but we do have St. Louis Fed President speaking at 1:10. Thursday, initial jobless claims. We will pay attention to that, and GDP coming out at 8:30 as well at the same time. We do have Fed President from Richmond, Tom Barkin, speaking right after the market closes at 4:30. And then Friday, PCE coming in, core PCE coming in at 8:30. So I will pay attention to that as well. And consumer sentiment coming in at 10 o'clock. So a lighter week ahead of us, and that is good. All right, so now let's start to take a look at some of our charts. We always start off with a blank chart here on the weekly time frame, and then we'll start to see what we can take away from this view. Right, so what's going on here? Right, we've been over the fact that we've broken this distribution level here, this distribution, and now we've had we had 1, 2, 3, 4 red weeks in a row. Finally, the first green week of the month. And what's really happening here? Well, we're coming back and trying or attempting to retest the bottom of the distribution range that we had already established, right? So now this will be interesting. And the thing I'm going to be really looking for in the bulls, what do they need to do, right? They have to recapture, again, and we went over this last week, the lows from the week of the 13th, right around 5,800. So that's going to be key. We really need to see that weekly close over 5,800 to start to really neutralize the trend that we are currently in. That's going to be a step in the right direction for the bulls, and they are attempting to do that. Let's see, the high of the week was 57.70 half, so still had a little bit of room to go. I think it totally is possible that we do go ahead and reach that area. Now, we were talking last week as well that we didn't want to be short in the hole, and thank God, hopefully no one was adding to a new short position down at the bottom of the range, because surely you got run over if that was the case. Now, where do I like the better short entry? Well, certainly would be coming back and retesting right that balance, right, the bottom of the balance range at that 5,800. And really we could also look at the bottom of the week, the prior week of the January 6th, and you can make a little supply zone there, right, at the bottom there. So anywhere from 5,800 to 5,840, I would say, bears still have a chance to come in and present some selling. Now we still have the weekly 9, we are under it, and the 20. They're both sitting right around 58. Well, the 9 is at 58.68, and the 20 is at 58.91. So pretty extended from those weekly moving averages. So we're not quite there yet. I believe when we flip over to the daily chart, we're a bit closer to those, and we were kind of talking about us needing to spend some time either sideways and up to give those moving averages, especially on the daily, a chance to try to catch up overall. But from this view, on the weekly, structurally speaking, right, we don't have anything really for the bulls just quite yet until, again, we start seeing some weekly candle closes like so. Now this would be a little bit more favorable for the bulls as the trend then is starting to be neutralized. But what else could happen? Of course, we have to be very wary that we could come up right into this area of potential supply and then make our move back down lower. Now on these counter trend rallies for the bulls, we've already seen one or two of them this past week as we've tried to push price up higher. They can be very violent, and you don't want to be standing on the other side of them when the algos are just on a bid up day, so we have to be wary of that. And sometimes on the short trades, right, we were talking about this 5800, but we also have now marked off that 5840 area. Sometimes they bring it a little bit higher than you anticipate, so just also keep that in mind. The other thing that I did want to mention is that we want to be mindful of that potentiality for a look above and fail, right? So what would I mean? Price comes up, it seems like it's going to recapture, maybe it comes back like this, maybe it comes up and then fails back down. That will be an extremely bearish scenario for the markets if they are unable to actually find acceptance over that 5800, 5841. And of course, where do I like to target if I was short in this scenario? Well, I wouldn't be short either in this area, in this scenario, right? Because if I was short here, I probably would get faked out, but that's okay. It breaks back under, and then what do I wait for? The retest once again, and then I hit the short back down lower. Always targeting at first, right, those prior equal lows. So back down to around 5,500 would be the idea in that case to start taking off some of those gains, and then see what happens from there. So that is one potentiality that we could see here on ES. All right, let's get into a daily chart and into one of the charts that we have already been looking at. We do have here on our overbought, oversold indicator finally coming under the zero line, not quite overbought yet, but this is interesting as we are continuing to cool off here for our readings. All right, let's get into the daily chart and see what we have from this view. Well, we cannot deny that either way that this could potentially be some type of a bear flag setting up. That's not what I wanted. All right, we just sideways and up and then down. So we have to obviously pay attention to that. If you are a pattern trader, that is certainly a potentiality. All right, now let's go ahead and get into one of our working chart here for the daily. And here we go. Okay, so what do the bulls need, right? Let's go over the bull case first. First off, let's just mention here the daily 9. We closed at 57.20. The daily 9 is 57.21 currently, so that 9 period moving average is starting to catch up finally, and we have the 20 sitting at 58.01 half. So I will be watching those two areas as well. All right, with that being said, structurally, okay, good. We closed over 5,700. That is good. And just barely closing over 57.13, 15. That is also good. I want to see that hold there for the bulls, but what do they really need, right? They have to get over these previous day highs, which we could not find any acceptance over. You can see right here, rejected, rejected, rejected. So that's what I'm going to be looking for on the daily. Can we get some closes Actually, this should be a little bit higher. And that's fine. Okay, and you can see the reactions here back from July, right? We also had some reactions here. Saw that this was an area where we distributed and broke. Okay, so here we are once again, multiple points of confluence in this general area. 5770, we'll call it. Need to see some closes over that on the daily, and then we'll go ahead and test that big first level at that 5800, 5810, and we'll start to see what happens there. But for me, holding 5700, holding 5715, step in the right direction, but ultimately, again, need over 5770 in my opinion. And then we've got that chance for that 580, 5800, 5810 next on deck, right? If we are able to start to find some acceptance right in this area, okay, we're starting to neutralize this trend then, right? Then we can start talking about coming up into 5820, 5850, and that again, when we were just going over that weekly analysis, that's around that area, that 5840s we were talking about, right? These lows right here, that's the next area that really needs to be recaptured for the bulls. So if that happens, then that will be very nice for them, and we can start talking about a bit higher overall, and maybe back up into the figure at 5900, maybe 5895. That is possibility, and maybe 5825, 5830 area would be next for me. But we are still technically in the downtrend. This area here starts to neutralize that trend if we start seeing this trading. So that would be pretty good for the bulls, but not completely out of the water yet. But that is what I'd be looking for, and I feel a little bit more confident in changing the tone overall. Now, last week we did talk also about that our overbought, oversold indicator here showing extreme oversold readings on our Momo, and another reason why I wasn't too interested in starting a new short or being short any time last week towards the end of the week here. And you can see this momentum definitely has started to shift and come out of those extreme readings, so that is good to see that working out, right? And we didn't want to be short down by 5600. We're up 120 points or so from those lows, so that was definitely good not to be doing that. All right, so what about the bears, right? Well, we're going to have to see acceptance under that 5700, really. We start to see some daily closes back around in this area, in this range. Well, then watch out. I'd be definitely a bit more cautious about breaking down lower. And what I also want to pay attention to is this potential. It hasn't really happened yet, but what if this also turns into a bit of a rounded top type of situation? Price just cannot get over that 5770, and then we start to roll over, come back down, and then where would I first be looking at? Well, this 5631, 5630 area could be very interesting as well, so I'm going to be keeping my eye on there. You can see the reactions there. You can see that this was a breakout point here. And you can see we did even stop here for a second on, which day was this? This was the 11th. So a couple of reactions here. Another one right here back from August. Boom, right here. Okay, so I'll be watching that 5630 area if we do start to actually make a little rounded top there and come back down. Now back under 5630, watch out, we'll go ahead into the prior week lows, so 5600 even, and maybe even a little bit lower than that. Now we do have a nice turnaround here, so you know what, I'm gonna mark off this level. We'll add this here to the chart as well, and that takes us down 5590, so I will be watching that. And certainly if that 5600 breaks, watch out, we'll probably revisit last week's lows and under that, if that breaks, well, down to 55.30. Okay, so that's what I'll be looking for on the daily chart on ES for the bulls and the bears. There we go, we got some levels. All right, let's take a look at a shorter chart now, get a bit more granular. We're going to take a look at, oh, you know what else I actually wanted to look at? Let's go into a 4-hour chart first. And I just wanted to throw this one out here a little bit. Since it's a 4-hour, a little bit more of a swing perspective, but a little bit more, I guess, of a short-term swing perspective. However, I believe these levels can definitely work or look from a day trading perspective as well, right? So what do the bulls need? From this view, back over 57.30, bring us back into 57.50, but the main thing is getting over the 57.70s, right? These prior highs, we can't break over it. Once they get over that, okay, we got a date with that 5800. Come back 5800, and then ultimately back into that area where we were talking about earlier on the daily, between that 58.40, 58.50 would be my view there, if we are able to see price really accept over 57.73. I would say it's 71 here, but I'm gonna give it a little bit of room there for a little. You can even say 75 if you want a little bit more extra confirmation. Either way, I don't chase that higher high. We wait to come back, see that it is actually accepted. When it comes back and retests, and that's when we are able to set up a nice profile for our risk and try the long trade. Now for the bears, though, I will say here it's all about 56.50, right? Look here, multiple reactions in that area, the lows from Friday as well. So if that is broken, well, then watch out. Same situation, breaks, come back, retest. I would not be surprised. Maybe we do a little pit stop at 56.25, but ultimately back down real close to the figure at 56.7, maybe 5700 or 56 even as well. So that's what I will be watching for that scenario. So it's either up and over here, and the 57.50 now also could be rejected. So we want to pay attention to that. We could get stuck in a range like this, or if that 57.50 is rejected, and then they break back below 57.20, 7.25, well, then watch out. The other path is straight back down to 5700, maybe 5680s. So there you go, and there you have it. And here I'll just draw out the bull case. If we break over, maybe come back, retest, and then that sets us up like so, back up higher. So there's some schematics for you on a 4-hour time frame. Okay, let's get even more granular. We'll come into a hourly chart. Let's look at some day trading levels now and see what we can take away from those. Okay, so here we go. All right, again, needing over 57.30, right? That's going to be key. You can see here we couldn't get over it here, couldn't get over it here. Okay, couldn't get over it here. No acceptance here either. Big area up and over 57.30. I'm feeling a bit more bullish in that case, and we will see. We're not even overbought here at all on our Momo. So over 57.30, I'll be looking more towards that long side and see if we can't come up and match these equal highs here. That was the key. We were just going over this area on the 4-hour chart. It's going to be key. And here in this case, I do have the 57.75 marked off when I was saying earlier how, hey, if you want to give it a couple more points for some extra confirmation, considering how strong the bears have been. Okay, great. There you go. So over 57.75. Wait for that, and then we can go ahead, just like I was saying before, the figure at 5800, and maybe all the way back up towards 58.25, 58.23. So be mindful though of these prior highs back here. So you know what? What I'm going to do actually is also just throw out another little level right there at 58.10, 58.09, about those prior highs, right? So that would be what I am looking at. You know what is... down just a little bit. Okay, there you go. And you know what? Let me do this because we did have a little bit of a fake break here. So I'll just mark that off. So I'm going to say 57.40. That's what they're going to probably really need over. I'm just trying to take it to account right here. Right here we had those kind of fake outs where it looked like they were going to accept, but they ultimately did not. So there you go. Okay, so what about for the bears now? What's that trade looking like? Well, certainly can consider, if you are bearish, up into this zone, looking for that short trade back down into 5,700, 56.93 if we break under the figure. But for me, we really start to, right now we're kind of in a neutral stance, right? You can see here we're balancing. Oops. We were balancing here, right? And now we're balancing once again, right? However, what was really happening, right? We have our swing low here. But these, even though they're lows, they're all higher, right? So the balance is starting to get a bit of a double, distribution or balance here, and this is looking a little bit more constructive because we have not been able to break this area here. So that's what's going to be the opening door. If we get back under here, this 56.90, 93 area, right? We start to see moves under that. I wouldn't be shocked to go ahead and see 56.60, 56.50 get retested again. But if that is broken, if 56.50 area is broken, you can see here, boom, boom, boom. We went over this on the 4-hour chart a moment ago. Well, then watch out. That would really, right now we're in kind of an, I can't even say, I guess I'll say it's bearish neutral right now. The thing that's starting to neutralize it is that these lows are higher, as we just went over. But what neutralizes that and brings us back to bearish, is if we are under that 56.50. Okay, then watch out. We could head back down 56.20, 56.25, right? The midpoint of this prior balance right here, under 56.20. Well, then that's a different story, and it would be likely that we would come back and revisit some of these prior lows closer to the 5,600 mark, and maybe even down if we certainly break that 5,600, 55.75, 56, 55.80 could be in the cards, anywhere kind of down in this general area. So that is what I would be looking at. All right, and you know what? Let's see. This should be fine. Yeah, 56.87, or excuse me, 55.87 possible down into that zone. All right, so that's all I've got for our ES day trading levels. Let's move right along into NQ, the Nesty NASDAQ, and see what we can take away from that weekly chart, and we'll go from there. All right, we got a blank chart here. Okay, very nice. And let's bring up our weekly. Oh, we're on our weekly uptrends. Okay, all right. We were looking at this last week. So let's just take a gander. Here we were talking about these channels, this breakdown that happened, and now this current breakdown, originally trying to establish itself, still have not recaptured this channel. So you still have to consider we come back up, retest, and then head back down once again. So that's going to really be the major time to see what these bulls are made out of. Counter trend rally, or is this the start of something? And of course, we just take it what the price tells us. We don't have, or at least I don't like to have, an overly strong opinion one way or another. The chart will always tell you what's happening structurally, and then we're able to make decisions, right, about what we want to do. So of course, for now it's bearish until proven otherwise. And we are kind of coming out of the the Ides of March. So we talked about how that typically is a bit of a more bearish market cycle seasonality wise. So are the lows in? It is very possible as well, just from that seasonality perspective. However, like I said, we'll just trade the charts and no opinions one way or the other. As of now, all this is just counter trend, and we'll take it as such. Okay, so it really depends on when we come up and test that trend line, but it could be how long it takes. It could be 2100, it could be 20,700, and 20,850. So it just depends on how long it takes. Either way, you can make the channel and just be ready for whatever way that it goes. All right, let's keep moving it along here. And let's get into our blank chart. Okay, perfect. All right, very similar story here on ES, right? We've got our distribution, the weekly lows from the 13th, right? And if I definitely love the Wyckoff schematics or models of looking at the way the market moves. Distribution breakdown. Now we have a retest of the distribution, not quite there yet. And then you get your second markdown, right? Distribution, markdown, phase 1, up, retest, markdown, phase 2. That would be normally the way it would play out. Invalidated again if we start getting under the weekly, it closes an acceptance over the 13th low, and you can go ahead and make that little supply zone from that prior week of the 6th as well. So there you have it. And again, of course, you always target back down towards those equal lows if in fact that this will play right there at basically 19,000. And if they really want to get interesting, it's possible we could even see down towards 17,340, but I am not sure how much of this downtrend is legitimate or just honestly seasonal. So we'll see. But that area of the 1900 is definitely a huge level, and also we want to keep an eye on this area. Right here, right? Definitely another area where I want to be paying attention to if we start to actually see a second markdown and we break under 1900, right? 18,750, and then really back down to 1800 even. But this area here where we distributed and broke down, I'll be paying attention to the highs of that. We could find some bids there who want to step in and try to save the market. So that's just below that 1900 figure. I'd only think we would get there if we broke that 1900 and found some acceptance, and that would still take us down, another 750 points or so. But we've been seeing, 400 point down days. So I was going to say it might take some time to get there, but with the VIX how it's been, it wouldn't be that hard, right? That's 2 red days, in a row if they wanted to be that vicious about it. So, all right, let's get into our daily chart here that we've been working with. and see what we can take away from that perspective. Okay, same thing. Could be just an old bear flag setting up here, right? The only thing that really is going to invalidate that for me from this daily view, well, we got to recapture, of course, 20,000, right? But what do we have to get over? And you can see here, again, rejection, rejection, rejection. We have to get over 20,190. Okay, a step in the right direction, in my opinion, would be some closes over 20K, some closes over 20,065, right? We start to see some candles close up here. That will be looking good. Getting more constructive. We see a candle close up here like this, right? And we're really looking much better over 20,300, in my opinion, recapturing the lows from the 4th. This would be good for the bulls. Then we can talk about higher prices, maybe even coming into the lows here from back in November. That might be interesting. I want to mark this off because we did have a couple of days here where we saw the market have a reaction. So I'll be paying attention to that right around 20,530. That could be where we also want to end up heading if in fact we get over and accept 20,300, right? The other thing is, even though this is a bit of a bear flag, I have to note we do have our swing lows, and well, we had some equal lows here, but they are trying to lift that offer overall, and just as far as building that base, and we have not made a new lower low. So okay, step in the right direction for the bulls, right? But what do they really need to hold, right? This 19,695, start to get back under that and start closing under that. Well, that would be the start of that breakdown and probably take us down 19,600 and maybe then even down 19,400s once again into these prior lows from last week. So, but bulls are still vulnerable. Any of these scenarios can also play out, right? 1, 2, 3. Those, of course, can play out, so need to be wary of that. But, of course, they can come up, reject, come back up, reject. You can see something like this as well. Could see it pull up, come back down, then break up to our higher high to the 20,300, break here, maybe come up, do a double top, then fail back down. Another potentiality. Does this hold then and we bounce? Maybe. Or maybe also we do fail back down lower. Now, of course, the bullish scenario would be that if it breaks through, maybe comes back up, break through here, maybe, and then instead of failing here, we don't have a double top, we break over, then we come back up, retest, and there. So there's a couple of different frameworks that may play out here on the market over the next week. Which one will it be? I have absolutely no idea. So we'll see. Either way, we've got kind of our levels here on the daily, what we want, what I want to be looking at. And I'll just know, that if we're in this area, yes, it's 20,065. It's, there's 300. This is, 200 and, whatever, 70 points or whatever it is. It's still definitely tradable within this range. And there are long and short trades to be had on the intraday basis, but you just have to keep in mind of what's happening structurally on the daily overall. And I will say, once we start getting over that 300, well, then we're starting to neutralize the trend, right? Still bearish, but bearish neutral instead of bearish, being totally bearish. And this would be a step in the right direction as we're really trying to confirm not making it, really getting away from those prior swing lows. The daily 9 here is sitting at 19,975 basically. So same thing as Same thing as ES, basically closing right at or under the daily 9, but the 20 is still a ways away, and it's actually up just over that 20,300. It's sitting at 20,373, so pay attention to that. I would think, it's a tough call. Do we come up a little bit higher? I'm also just be a little bit cautious of maybe even being stuck. I think that if we stay like this, that's going to be the most bearish type of scenario. It'll be like bearish consolidation here, bear flag, and then we'll see. We won't anticipate. I mean, it's a wide range, so it'd be technically hard from that day trading perspective, but from the swing trading perspective, at least we know here, okay, over 20,065, then we might have to, the bears might have to start to think a little bit differently, might have to take a little bit more pain, but as I mentioned, they've got all the way to 20,300 without really being in too much trouble, and even then you've got the 20 and just 70 points up above that. However, I just kind of think that we could see a little bit more of this sideways or sideways to up type of price action, maybe a little bit grindy either way, because then something with trading like in this range like this, even wider, because then it's going to give time for the 20 to kind of catch up and come a little bit closer towards that 300 mark. So I wouldn't be surprised about that either. Now, again, as I mentioned, for the bears, really got to start to see acceptance back under that 1900, 695, and then I think that they would be sitting a little bit more pretty and trying to at least hit the equal lows again. But of course, we have to worry or have to keep in mind that they could break underneath those lows. And underneath 400, underneath last week's lows, which looks like the low was the 11th, and that's at 19 360, basically 57. Start to break under that. I think we would probably more than likely retest the lows from September 11th and take us back down to 283, 285 area there. So I'll be watching for that as well. I think this Momo though needs to perk up a little bit more before we seeing anything. All right, now let's break it down to some hourly charts and some day trading levels that I'll be watching for this week. Okay, here we are. Okay, so similar again to ES, we're coming this now. NQ looked a little bit stronger here in the sense that we're tried to get over this resistance where ES wasn't quite there yet. From this view, definitely over the 9 and the 20. The 9 sitting here on the hourly, about 100 points lower at 870, and the 20 on the hourly is at 855. So that, at least in the short term, is looking good. Nice hourly bull flag breakout at the end of the day, Friday, for our witching day. But what can happen here, right? Same situation, right? And we just have to be very cautious and look, because even 2 hours here failed, right? It looked like it was holding, failed right here. We never even got an hourly close here, but I'm sure on the 5-minute, this looked like acceptance. So big area. Look at the hourly lows here from back last week as well. So it's all about 20K for me, pretty much. My zone here starts at 19,966. We can call it 19,965, but need that acceptance over 20K. Okay, once we do that, all right, then it's possible we can come up a bit higher. And the main thing is, again, same thing with these prior highs. That's really what I'm going to be watching out for. But if we start to see some acceptance over 20K, over 966, all right, then it's possible we'll go ahead and try to come in Maybe we get stuffed here at the highs around 20,100. That got shorted, pretty much the figure there. So we just want to watch out. Could get stuffed there, but really the bulls need over 20,160, right? That's going to be what will really set them up for the bigger push up into the 300s and the 340s. And we already kind of went over the 300, 340 area is important on that longer time frame. So that's what I'll see. Over 20,160, then be looking up at, of course, we've got the figure 20,200, but we can easily do another 100 points, 20,300, and then 20,340, back up towards these prior highs, right? So there's for the bulls. Now, what about the bears? Right, we could just end up rejecting right here, boom, right, bringing us down. But even if we came back to 19,850, okay, I still would favor the longs overall, because then still we've got our swing low just coming up to match these hourly equal lows. We could just take off from there. Do we get rejected and get stuck? I don't know, but we also could pop up over, come back, retest, find some, build up some bids, and go ahead and head up higher like that. But for the shorts, as I mentioned, right, we could, and it really opens the door underneath that 950, 945, maybe even we can just say the figure, right, because that 19,800 held up pretty well on Friday. So I think if they start giving up the figure there, well, then watch out. We could come down into these minor sell sides at 19,530, 19,730, 19,750, right? So I think that would be likely. And then underneath that, we've got the next figure there at 19,705, 19,700, all the way down to 19,654. Now, if that 19,650 breaks and accepts, be looking for more downside, and we're looking potentially back down towards 600, and then 19,530 would be my next area where we could potentially come down to. You can see the reactions right there. Anything under that would be the same scenario. Watch out for the prior lows of last week. But as I mentioned earlier with the ES, it is balanced here. So we could just end up continuing to trade in this balance range, right? So definitely something to be mindful of. All right, I think that's everything that I wanted to go over for the markets. Let's take a look at some of our other data points and then close up the video. Let me see. Okay, just checking how we're doing on time. Now, we were talking about VIX volatility getting a little bit crushed here, and we're continuing to see that, right? We could not get over that area of the 30, 28, 29 area here. Couldn't get over, and now we are continuing to see a decrease in volatility. It's still elevated though, right? We're still basically, we're under 20. Okay, that's a step in the right direction. Really need under 19. We get under 19, excuse me, yeah, we get under 1895. I think that would be a step in the right direction, bring us down into 1760s maybe, and ultimately we would want to see volatility come back down to 1575. We've been over this area. 1575 to 15 is kind of our pivot, whether or not volatility is cooking or not. So we're not quite there. I'm not sure that we get there, but either way, it is starting to compress. And, you know, as much as fun as it was trading with the VIX up in the 24s and 23s, you know, those 30-point candles on NQ, 35-point, 2-minute, 1-minute candles, 50-point, 5-minute candles can rip your face off. So I personally will be enjoying just a little bit less volatility, a little easier to handle and trade the markets though. But I do appreciate a higher VIX overall, and that is what we want as traders. That higher volatility definitely gives us more opportunities in the market. All right, we also spoke about the put call ratio getting a bit offsides for the for puts, and you can see here now we've really normalized back down. We are even Steven here, so I posted on X about this going on here. Boing, 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 right? And we didn't get an extreme level, right? Put call ratio can get way more offsides. You know, when we see readings like this, these are Uber buys or Uber sells, but it stayed within the range. We were in the high. Another reason why I did not really want to be taking any new money shorts into after last week, right? All right, let's move it along. Let's see if there are any changes in the 10-year. Still re-steepening. Okay. Okay, 1-day VIX still holding 15. All right, we need to see this under 15 for less volatility, but if this holds, still is a sign of volatility being there to stay. Now let's take a look here in the in the SPX, how many stocks are trading over the 50 period moving average and 200 period moving average. All right, despite the markets moving up, now didn't even actually, I thought we would retest this downtrend here. We didn't even get up there, and this is starting to roll again. That's a little bit concerning under the hood. What's going on here? I'm surprised at this a little bit. Honestly, I thought this would be a little bit higher. We are not over the 50% mark yet, so only 33% of stocks are trading above their 50-day simple moving average. Not ideal, so breadth a little bit weak still, and nothing really to report here on the 200 other than we're not over the 50% marker yet. So this one's a slower moving because it's based off the 200, so this is going to be slower moving anyway. So nothing really there. Breadth still overall looking weak. Let's look at new highs versus new lows. Did we get over the zero line? No, we did not, right? It tried to get over our zero line. That's would have been a nice first step for the bulls, but they were unable to do that. That is not good. And actually, let's look at some of our weekly inflows. We can see here, even though we had that rally at the end of the day on Friday, look at our inflows. Not looking good. ADD was pretty weak as well, but came kind of from that extreme. What is this? Correct this bar. I don't know what that is. We did come off these extremes, but nothing over the zero line. But no matter of fact, I'm gonna take a little screenshot about this. Most of the sectors there too on Friday were red, but we did have only 3, but nothing really that looked too nice. So what I'm really getting out of this is just still be cautious. Now we do have SPY recapturing this trend line. That's good. Let's see if that holds. Looks like a bit of a double top though. Junk bonds trying to move up a slight tick higher. This coming lower and this ticking up higher a little bit of a bullish divergence there, I would say. Not really super strong. I mean, if this made a higher high, then and the SPY was down like this, I'd say that would be better. To see, let's look at the rest of the bonds. 7-year and 30. Oh, 7-year kind of picking up a little bit, overall flat, but still moving up higher. And need to get this ratio here between our 7 and 20 back over the. It needs to stay under the 50, I should say. And what's happening here with TLT? Nothing, just sideways. Let's look at the dollar and the yields. Okay, interesting. All right. So I was wondering about this here on the dollar. We're going to go over that first, about this being some possible accumulation taking place. Have been unable to break lower, right, under the 103 area. So I was wondering about, and this is just the opposite of when we were looking at the weekly ES and NQ for the distribution breakdown. Now this is only a 4-hour chart, but can we say maybe that this is an accumulation taking place? Well, it is very possible. And the other thing is here, finally we have, what is this? Now we actually closed over 104, only 14 cents, but the dollar moves a lot slower. Step in the right direction there for the dollar bulls, and if this does continue to stay over 104, I would be anticipating us moving back into 104.50, and we'll see how this kind of affects the market. Definitely overbought here on our Shark Momo readings of about 11.69. So again, a little spicy. So I'm not so sure that this will hold. The 4-hour 9 period moving average are right at 103.89, so that could be interesting as well, holding that. And the yields in the same situation. They're looking a little bear flaggy here. Maybe could kind of make that case, but really nothing. We got to get under 42 if we want to see yields drop off. Otherwise, this can sustain and potentially come back up into the 43, maybe 43.50 area, but over 43 I think is a step in the right direction for the yields, and that would bring the bonds down lower once again. But still kind of similar situation, kind of looking a little bit like a head and shoulders for sure here. Shoulder, head, right? Never broke the neckline, so we can kind of say these prior lows being the neckline here for yields. Let's take a quick look. Any divergences here in the transports and the Dow? Well, transports had made a new low, and the Dow is not. So that is interesting. They are not in lockstep right now. The Dow is coming into that daily, over the daily 9, but we've got the 200 SMA giving it some issues. The Dow really needs back over 42,290. I think that would be a step in the right direction for them. Let me pull up this, but that has not happened yet. It is interesting though how the transports now have made a new low and the Dow has not, so there is a divergence here going on that is a little bit concerning. Let's look at our VIX. Okay, I'm gonna have to set this up. We'll do in the next video. We'll have the updated contract here because we did just roll. But we're getting over the zero line. This is definitely looking a bit more constructive here on the month versus the 9-day, and the volatility of the volatility actually showing to me, that we could be definitely seeing that 1895 break on VIX here, back under 100, back under 93. So this is interesting, and this is definitely looking like we're trying to compress on the volatility. So maybe do have a little bit more upside in store just based on this reading here. Okay, we'll take a quick look at the skew. All right, kind of bouncing back a little bit. These are those longer term options. So it looks like they're starting to get a little bit more risk adverse, and nothing really saying anything on the inverted ZT as far as rates are concerned. Looks like they are anticipating just holding for the Fed, holding rates the same for longer. All right. I think that's everything I wanted to go over today. Thank you so much for taking the time and reviewing the markets with me and setting up a plan for next week. And as we always say, a prepared trader is a profitable trader. So let's plan those trades and trade our plans. I'm wishing everybody a great trading week ahead, and I hope you have a great rest of the weekend. And again, if you enjoyed the content, enjoyed the video, don't forget to subscribe to the channel. It really means a lot to me and helps out. So let me know what you think too as well in the comments. Do you think we have a little bit higher to go before we see lower, or do you think that the lows are in for the year and we start to grind up the wall of worry with the tariff talk? And honestly, I think the tariff talk is kind of getting, because Trump keeps flipping back and forth on what he wants to do, and I think the market's getting a little bit less sensitive to those talks. But we'll see how that works. And that's it. So again, thank you. Have a great weekend. Take care, and we'll see you all on the other side.